Did you know that home prices have skyrocketed over 40% in the last few years? But experts are now warning of a potential crash. With rising interest rates, inflation, and economic uncertainty, is the housing bubble about to burst? Let's break down what's really happening and whether home prices are going to be heading for a steep decline. Hi, everyone. I'm Erica McClain, a Chicago real estate expert, and today we're talking about something every homeowner and buyer needs to hear. Are we on the verge of a housing market crash? With so much uncertainty in the economy, many people are asking, are home prices going to plummet? Will we see a repeat of 2008? Should you buy or sell right now or wait? By the end of this video, you will have a clear understanding of what's really happening and what it means for you. Okay, let's start with the major challenges currently putting pressure on the housing market. First, rising interest rates. Mortgage rates have jumped from historic lows to over 6%, making homes less affordable for buyers. This has reduced the demand, leading to fewer bidding wars and longer days on the market. Second, inflation and cost of living. Inflation means higher everyday expenses, leaving people with less money to spend on homes. Higher costs of materials and labor have also slowed down new construction, impacting the housing inventory. Three, increasing inventory levels. More sellers are listing their homes as they fear missing out on peak pricing. If supply outpaces demand, prices could start falling fast. Then we've got the job market uncertainty. Layoffs in major industries have shaken consumer confidence in making big purchases like homes. So, if unemployment rises sharply, demand for housing could take a big hit, causing prices to drop significantly. Okay, now let's look at what the data is telling us. Supply versus demand. A balanced housing market typically has 4 to 6 months of inventory. Right now, some cities are seeing inventory double or triple compared to last year. When there are too many homes for sale and not enough buyers, that's when prices drop. Home price adjustments. In some markets, prices have already started declining. Sellers who bought at the peak may have to lower their asking price just to get offers. Then there's the impact of the mortgage rate. When rates rise, a buyer's purchasing power shrinks. Example, a $400,000 home at a 3% rate versus a 7% rate, buyers can afford way less house for the same monthly payment. This lowers the demand and puts downward pressure on prices. Is this going to be 2008 all over again? Here's some key differences. Stronger lending standards, no more risky subprime loans, more homeowner equity, fewer foreclosures, but market corrections still happen, especially when affordability crashes. Here's the biggest red flag. If mortgage rates stay high and we see more layoffs, prices could drop fast. Cash buyers and investors are already pulling back. Luxury and high priced homes are seeing price cuts first. Sellers who need to sell are starting to lower their prices to attract buyers. If demand doesn't recover soon, we could see a slow but steady decline in home values. More price reductions as sellers compete for fewer buyers, potential foreclosures rising in certain markets. So, should you be worried? Here's what we know: prices may not collapse overnight, but they are softening. High mortgage rates continue to shrink buyer demand. If unemployment rises, the market could decline even further. If you're a buyer, waiting could mean better deals. If you're a seller, pricing strategically now may help you avoid major price drops later. So, what do you think? Are home prices headed for a crash or just a correction? Drop your thoughts in the comments. Want to know how to sell your home before prices drop further? Watch my other videos on how to price your home to sell fast. And don't forget to hit subscribe for more real estate insights. I hope you found this information helpful, and thank you so much for watching.